السلام عليكم ورحمة الله. بسم الله والحمد لله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Chawi. Today is Sunday, the 1st of December 2024. We're almost ending the year and we're approaching 2025. So I hope you're listing down the goals and the things you want to be doing and getting done next year. So let's get started with the weekly review. And by the way, I'll be having a macro weekly review on all of the markets at the beginning of the next year. So stay tuned for that. Starting with this weekly review, viewing the XY on a weekly time frame chart. As you can see, price rate trades down lower into the internal range liquidity. We have this pivot gap right there after we swept out the buy side liquidity, this buy side liquidity and the other buy side liquidity at this level. Price started breaking down lower as I was mentioning here towards this busy buy side imbalance, sell side inefficiency. So this is inefficient with the sell side delivery, and we're starting to show some, I'd say, balancing out that busy. We have this premium wick. Since we're trading below it, anything above market price right now is considered premium. Before we traded Before we trade it down lower, this would be considered discount, but since we trade down lower and we're below it, it is considered as a premium. If price wants to retrace up higher, it can retrace to the midpoint or the constant encroachment of the premium wick. And if it really wants to trade down lower, we'll be seeing some reaction at that point, at that level. That can push price down lower towards this midpoint of this discount wick, the midpoint of that discount wick, or the constant encroachment, and we have this busy heavy gap as well. Going to the daily time frame chart, as you can see, if we go down, as we can go back up here, the midpoint of this is roughly the, oh, sorry, is roughly, this is the 106, this is 106.5, so it's roughly with the 106, let's say 0.4, roughly about that level. If you go to the daily time frame chart, the one, it would be somewhere around here, which is the bearish breaker right there. So the bearish breaker, and we have that small favor gap right there. So price can retrace up here, pretty much accumulate some orders here that can be offset at the midpoint right there that we talked about on the weekly time frame chart and the weekly favor gap right there. So that's going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, ES has took the buy side liquidity right there. You can see how it took. I'll be showing it to you on a zoom in version here on the daily time frame chart later on. But price has swept out the buy side liquidity. Looking for sell side liquidity to be targeted. We have these relative equal lows. We have this sell side liquidity that has been recently formed. This sell side liquidity. So I know that price is just pushing up higher and we're on a buy program. I'm not trying to catch the top here, but what I'm saying is that we are likely going to expect price to push down lower. I don't like to see these sell side liquidity just being left in the market. So price can just from here just push up higher and run for like the 6,200 level, because we're approaching the end of the year, and this is a season where price already, there's going to be a lot of spending in the US, and this as a result will translate into better earnings for companies. So for ES, it's like it consists of the 500 companies in the S&P 500. So if there's a lot of spending, this will translate into higher prices in the index, which is the ES. So this could be one of the reasons that price can push up higher, but technically speaking, based on the price action, I'm looking for lower prices. We have this sell side liquidity here, these are typical lows, this sell side liquidity here. Price can push up higher. You can see that this is like can be considered as a bullish order block. Price traced down lower here to that bullish order block, and then pushed up higher. So this will be considered as a bullish propulsion block. People can be looking at it this way, but um, I'm not trading, or I'm not looking at the market in the terms of patterns. I'm looking at the market in terms of the efficiency. How can we make the market efficient? If I'm a market maker, how can I make the market efficient? Because the way the market is just going up higher here, it is not efficient. So to make the market efficient and to pretty much induce interest in the market, we'll have to see some movement to the downside that can trip people who are trying to go short to hold their position short, which price can transition into buy program again and push up higher for higher prices. So going to the daily time frame chart, you can see how we have a high here. Price took out that high, and we have an SMT with NQ. Later on NQ, I'll show you on the daily time frame chart how NQ wasn't able to take that high. So if this starts the stepping block for a sell program, um, we have an SMT. So NQ is going to be weaker to the downside. ES is also going to start the sell program, but it's not going to be as weak as NQ. So from here, we can look at this side equity here, the fair value gap here, daily fair value gap, and the rate equal lows here. So pretty much a slow week here. This is Monday, Tuesday, Wednesday, and Friday. Thursday was a holiday, so it's not here. It was a Thanksgiving holiday. So this also will be like an answer why we had a slow week this week. So this is pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, NQ wasn't able to take out that buy side liquidity, and it's pretty much very slow due to the holiday mainly. So going to the daily time frame chart, you can see how price traded up higher. We traced into that area here. We have this daily fair value gap. Price is just respecting it here, a bit of a mohawk here, and we have the weekly fair value gap here. Sorry, the daily fair value gap. So price might take some orders here and just break down lower to the downside. Now, before it break down lower, we might see price push up higher one more time to take out this buy side and the residing buy side liquidity here, and then push down lower. So it'd be like accumulation, manipulation, and then distribution, something like this. So that's going to be pretty much it for NQ. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. As you can see, after we took out the sell side liquidity and we traded down to the monthly fair value gap, price had a reaction here, and we were close to trade towards that internal range of liquidity, which is the SIBI sell side imbalance, buy side inefficiency. So it's inefficient with the buy side delivery. So we might, this is what I'm expecting next week, that price will be trading back into that SIBI to make some of it efficient. So that would be the low hanging fruit that you could be looking at as a means of targets. This is not a financial advice by any means. This is just my opinion about the markets. Going to the daily time frame chart, the same thing would be mentioned here. Price took out the sell side liquidity here, took out this sell side liquidity, which is this sell side liquidity right there, and traded down to the monthly fair value gap. If you go to your monthly time frame chart, you'll see that fair value gap. From here, price is slowly approaching up higher, take out this buy side liquidity, and we have the weekly fair value gap. Above that, we have this daily fair value gap right there. So that's what I'm expecting here for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see that Pound has traded up higher, traded into the internal range of liquidity, the SIBI, and made some of it efficient. So from here, there's not much, like since price took the internal range of liquidity, I'm expecting price to reverse and take out the sell side liquidity, but not immediately because EU or Euro USD, the fiber, is still wanting to reach up higher for liquidity that's residing above. Going to the daily time frame chart, you can see how price took out that buy side liquidity, which EU of the fiber Euro USD didn't take yet. So from here, price can just run up higher towards that daily 50 gap here, and then start breaking down lower towards this side liquidity. So don't be afraid of these retracements. These are rarely retracement that forms the turtle soup entries. So price will be forming these turtle soups here at this, like it will be rejecting the highs and breaking the lows. As you can see here, rejecting the highs and breaking the lows. So don't be afraid of seeing that in price action. You can see that we've been actually, this could be like the start of a buy program, because what we've been trading down lower since what, mid September, and we're approaching December. So it's been like, you can say, October, November, and mid September. It's like 2.5 months. So we can still see until the end of the year, we can still see sell side, or like sell program being held in price, but that doesn't mean that it is 100% a surety that's going to trade down lower. But what I'm trying to say here is that don't be shaken down by those deeper retracement that take out the buy side. It's totally and 100% normal to see these in price and in the markets, because they're trying to induce interest in the markets, and that's the only way that they can do that. A lot of people can, this will pretty much set traders off. Some of them will go long because, oh, they'll be saying that, oh, this is a bullish breaker, I'm trusting it, and this is favorite gap. They'll be setting their buy limit orders here at this candle's low. Other traders, no, they'll say this is just a turtle stop, they'll be setting here. So that's the way the market induce liquidity into the market. This is the way that the market engineer interest, so that other retail traders can go into the markets, suppose something that is right when it's wrong, and they can be tripped. So that's going to be pretty much it for this weekly review. I really hope you found this one insightful. And just as a side note, you gotta take it easy the first week of every month. It is not for you to push, especially because we're approaching the end of the year, where like it's really filled with a lot of holidays. We have Christmas going on like 2 weeks later, so, or 3 weeks. It's on the 25th of December. So you gotta take it easy. Start the month strong. Don't try to be impulsive with your decisions. Be patient and just pick the right trades every day. That's going to be pretty much it. Until I talk to you next time, be safe. Wassalamu alaikum warahmatullahi ta'ala wabarakatuh.